Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 31st of July. All right, now we're just kicking off the Asian session. Tokyo just about to open, and this is the big day, right? We've been waiting for today to come up all week. Wednesday, I'll just run through the what's coming out. This should get the blood tingling. But starting with Chinese manufacturing data, then into half an hour after that, we've got the Aussie CPI numbers. Right, very important for what the RBA are going to do with rates. Also, the ECB, the flash estimate. Okay, this CPI number is probably the key one that will get things moving if there's some variance. Then you got the Canadian GDP, the overall, what I would call the health check of the Canadian economy. Obviously, a big number. It has ramifications for policy, and it should give us insight into how the rest of the economy is going. And then, of course, it ends with the FOMC, right? Now, this is going to be a bit of a monster. The rate cuts factored in, and it's almost factored in a bit of a hawkish statement as well. So it's going to be pretty loose as we go through that. And that's obviously going to be very important because it impacts all major currency pairs and US dollar related instruments. Okay, so whether you're trading gold or equity indices or whatever it is, they are all going to move. Now, just having a quick overview of the analysis. Right now, it's a little bit odd because we've got the daily analysis, like the daily charts, right? They are sort of all moving in the right sort of direction. Okay, so what we've got is a situation where, the dollar index and the dollar pairs are all moving up, which is gorgeous. And all the other pairs here all moving down. So we've got uniformity there. But what we are seeing just at the moment as we move into the Fed, and this is because we don't know what the Fed are going to do with regards to the statement and all these sorts of things, we're starting to see a lot of these currency pairs. Well, let me just fix that up. We're starting to see a lot of the currency pairs cruise into a bit of a sideways momentum. And it's been like that for the last couple of days. Now, the standouts, of course, have been sterling is just rocking to the downside. The market is fully factoring in a no-deal Brexit, right? And they're expecting that to be really bad for the UK. Or the uncertainty is a lot of big companies, a lot of funds are closing out their exposure because they don't know what the hell is going to happen, whether it's going to be positive or negative. So that's where we are. If Boris Johnson can come back and get the EU to do some sort of deal, you'd expect sterling to blow to the top side by 400 or 500 points, where it's just come from. So outside of what we've currently got, you got to almost leave sterling alone in this regard, because it will move with the Fed announcement, but it's doing its own sort of weird tap dance, and it's all downside. Now, obviously, that works very nicely with a strong statement from the Fed, right? That'll push sterling down even further. Now, the two other little Antipodeans here are shaping up quite nicely. They are still dribbling down on the hourlies, and they have broken down on the daily charts. So that's, the Aussie and Kiwi seem primed for potential opportunities. And funnily enough, we do obviously have a couple of key releases here. Now, the Chinese numbers, as you can see on the text here, will impact the Aussie, Kiwi, and China. Whereas the CPI numbers will impact the Aussie. So if you're looking for a trade, to me, right, the Aussie is going to be prime target. What we're looking for is weak manufacturing numbers in China, or I should say, weak Aussie inflation numbers. It goes with the current short-term and medium-term trend, and that's the easiest side of the market. Now, don't fall in love with the positions, because this could all change when it comes down to the Fed, right? If the Fed does something weird, cuts rates and says, you know what, we may have to do more, which I just can't see happening, well, the Aussie will rally regardless of these weak data. So any trading opportunities ahead of the Fed, you're going to have to reassess when it comes up to the Fed announcement. And I would expect a little bit of ambiguity around their release, right? They might be sort of talking about, well, we have to wait and see what the numbers are doing. They could, if they were clear and they came out and said, this is a one-off cut, we're going to have to do something else, well then, it changes the picture. But there's a lot of uncertainty around the statement and also the press conference as well, right? So I'd be very wise to manage your positions around those opportunities. If it does come out strong and all the other data is weak, well, we're going to get a really nice clean move. What we're looking for, to me, is a strong reference point from the Fed with the statement, and so maybe some strong talk in the press conference, because that is going to light up all the hourly charts here on all the dollar pairs. They will all scream to the top side, and the other ones are already moving down. So we could get some really nice clean moves here across the pairs. Now, outside of that, there are two pairs, the dollar index itself and the euro, which are really just tweaking through weekly trend lines. It's not going to take much to light up euro as in a sell, sell, sell situation right across the board. So just be aware we've got plenty going on there. Now, if I just give you a quick look at the charts, the devil's in the detail, and you can see very clearly, I mean, Aussie and Kiwi, they aren't really racing to the downside like Sterling did, with Brexit, but they are sort of moving down. I would expect them to start trading sideways by later today. So once again, good, clean. The trend is down. That's the best trading opportunity. Of course, if the Fed is dovish, which I don't expect, well, then we could see a bit of a clean out to the top side. And all currency pairs are basically waiting for the Fed, right? Obviously, dollar CAD, the Canadian GDP numbers could come into play. They come out about 5.5 hours before the Fed, so we may see something there. If you get really strong GDP numbers, I really like the idea of getting short dollar CAD, especially the way oil has rallied a couple of bucks overnight. It supports a strong GDP. It should be a clean trade to the downside in dollar CAD. Euro, we have to wait and see. Those CPI estimates will come into play. But once again, the Fed is going to override all of these earlier announcements. Right, so we've got plenty of opportunities. There's a bit of momentum around on your charts. So make sure you sort of know what you're looking at, because this is where, we've been waiting for opportunities where we get clear direction. Today is the day. All we need is Fed Chairman Powell to deliver, and we may see these things continue. So to me, I'm looking for a hawkish Fed. Maybe it's pretty hard after they just cut rates. Now, obviously, one thing I haven't actually covered is if they don't cut rates, well, it's sort of been factored in. So the US dollar will scream to the top side anyway, and it goes with the current trend. So you'll see all the dollar pairs race to the top side, all the other pairs race to the downside, and we should have clean trading opportunities. All right. So at the moment, it's a bit of a market liquidity, normal liquidity, wait and see markets, and it is going to all light up in that North American session. And just to reiterate, Asian session, keep an eye on the Aussie and the Kiwi. We've got those Chinese manufacturing and Aussie CPI, Eurozone CPI, I should say, Canadian GDP, and then hold your hats. And as it's going to get a bit breezy with the federal funds rate and statement. All right, guys, that's it from me. It's this is the big day. I mean, this the Fed announcement, I can't sort of stress enough. This could give us sentiment for the coming month, right? So I know we've got the US non-farm payrolls on Friday, but if that lines up with what the Fed says today, we're going to have a very clear trading opportunity across all pairs. The only bad situation for us would be negative, some sort of negativity, whether it's dovish comments from the Fed, and that would correct these dollar pairs and also the other pairs, and that would put us back into full sideways trading again. And that's where we've been for some time, and we all know that sucks. So hopefully, fingers crossed, we do get something from the Fed that works with the current market conditions. All right, guys, all the best. Have a great trade day, and we'll see you in the 247 trade zone. Cheerio.